studying your last two. I swim with tea when they turned in. The staring out to mute and can lend a pole that some kid died.
Now let's begin our discussion of Schedule 15, which is used to report First Home Savings Account, or FHSA, contributions, transfers, deductions, and other account activities on a Canadian personal income tax return. The First Home Savings Account is a registered savings account designed to help eligible first-time home buyers save for the purchase of their first home. It combines valuable features of both an RRSP and a TFSA. Eligible contributions may provide a tax deduction, while investment earnings can grow tax-free inside the account. When all the qualifying conditions are met, eligible withdrawals used to purchase a first home can generally be made on a tax-free basis. The illustration at the top of the slide introduces this concept. A young couple is saving for their future home by contributing money to an FHSA account. As their investments grow over time, they move closer to achieving their goal of homeownership. Schedule 15 is the tax form used to report these FHSA activities each year. The visual story in the center of the slide explains the complete journey. First, an eligible individual opens an FHSA with a financial institution. Next, contributions are made to the account throughout the year. Those contributions and any investment growth remain within the FHSA. During tax preparation, the contribution information is reported on Schedule 15, allowing eligible contributions to be claimed as a tax deduction. The savings continue to grow until the account holder is ready to purchase their first qualifying home using the accumulated funds. The information cards at the bottom summarize the key concepts. The FHSA is a registered savings account created specifically for eligible first-time home buyers. Eligible contributions may reduce taxable income by creating a tax deduction. The primary purpose of the account is to help Canadians save for the purchase of their first home. Schedule 15 records all FHSA contributions, transfers, deductions, qualifying withdrawals, and other account activities for the tax year. The reminder on the right side highlights an important point. Schedule 15 serves as the official record of FHSA activity reported on the income tax return. Maintaining accurate records throughout the year helps ensure that contributions, deductions, transfers, and withdrawals are reported correctly. As a professional tax preparer, your responsibility is to collect the client's FHSA statements and supporting documents, verify all reported contributions and account activities, enter the information accurately into certified tax software, and carefully review the completed Schedule 15 before filing the return. Accurate reporting helps ensure that taxpayers receive every FHSA tax benefit available while remaining fully compliant with CRA requirements. Now let's see how Schedule 15 reports the various activities that take place within a First Home Savings Account, or FHSA, throughout the tax year. The process begins when an eligible individual opens an FHSA with a financial institution. Once the account has been established, the account holder can begin making eligible contributions throughout the year. These contributions are recorded by the financial institution and may qualify for a tax deduction when reported on the income tax return. As contributions are made, the financial institution issues official FHSA statements that summarize the account activity for the year. These records include contribution information, transfers, withdrawals, and other account transactions. These statements become the primary source documents used during tax preparation. When preparing the tax return, the information from the FHSA statements is entered into certified tax software. The software automatically creates Schedule 15 and reviews all of the account activity. It records eligible contributions, identifies transfers between registered plans when applicable, determines any available tax deductions, records qualifying withdrawals, and updates any carry-forward information required for future years. After these calculations are completed, any eligible FHSA deduction is transferred automatically to the taxpayer's T1 general return. By reducing taxable income, eligible contributions can lower the amount of income tax payable while helping taxpayers save for the purchase of their first home. The comparison shown at the bottom of the slide illustrates two different outcomes. A qualifying withdrawal that meets all CRA requirements for purchasing a first home is generally received on a tax-free basis. However, withdrawals or activities that do not meet the qualifying conditions may receive different tax treatment depending on the applicable tax rules. The reminders on the right side emphasize several important responsibilities. Always retain FHSA contribution statements and other account records provided by the financial institution. Carefully review contribution amounts and transfers to ensure they are reported accurately. Finally, verify that any withdrawals qualify under the FHSA rules before completing the tax return. As a professional tax preparer, your responsibility is to collect the client's official FHSA statements. Verify every contribution, transfer, and withdrawal. Enter the information accurately into certified tax software, and carefully review the completed Schedule 15 before filing the return. Although the software performs the calculations automatically, accurate documentation and careful review ensure that taxpayers receive every FHSA tax benefit they are entitled to while remaining fully compliant with CRA requirements. Now let's see how Schedule 15 is completed in a professional tax preparation office using certified tax software. The process begins by collecting all of the taxpayer's FHSA documents from the financial institution. These records typically include FHSA contribution statements, transfer records, qualifying and non-qualifying withdrawal information, annual account statements, and any additional documentation needed to support the taxpayer's first home savings account activities. Having complete and accurate records is essential because Schedule 15 is based entirely on the information reported by the financial institution. Once these documents have been collected, the tax preparer enters the information into certified tax software. The software automatically creates Schedule 15 and begins processing all of the FHSA activities for the tax year. During this process, the software records eligible contributions made during the year, identifies any transfers into or out of the FHSA, reviews available carry-forward amounts, records qualifying withdrawals used for an eligible first home purchase, identifies any other FHSA account activities, and calculates the available tax deduction. After these calculations are complete, the eligible FHSA deduction is transferred automatically to the taxpayer's T1 general return. Although certified tax software performs these calculations automatically, it cannot determine whether the information entered is complete or accurate. That responsibility belongs to the tax preparer. Before filing the return, always verify the official FHSA statements provided by the financial institution. Confirm that all contribution amounts have been entered correctly. Review every transfer into and out of the account. Verify whether each withdrawal qualifies under the FHSA rules, and carefully examine the completed Schedule 15 before submitting the return. Several common mistakes should always be avoided. Missing FHSA statements may result in incorrect reporting or lost deductions. Entering incorrect contribution amounts can affect the taxpayer's available deduction. Incorrectly reporting transfers or withdrawals may lead to errors on the return. And failing to review Schedule 15 before filing may allow simple data entry mistakes to remain undetected. Before submitting the return, complete a final checklist. Confirm that all FHSA statements have been collected and reviewed. Verify every contribution. Review all transfers. Confirm that qualifying withdrawals have been reported correctly. Ensure that Schedule 15 has been generated successfully. And verify that the FHSA deduction has been transferred correctly to the T1 general return. The key lesson is simple. Schedule 15 records all First Home Savings Account contributions, transfers, deductions, qualifying withdrawals, and other account activities for the tax year. Certified tax software performs the calculations automatically, but careful document collection, accurate data entry, and a thorough professional review are essential to ensure that taxpayers receive every FHSA tax benefit available, while remaining fully compliant with CRA requirements.